Welcome to Queen Bee. Over the holidays, I became a beekeeper. I've got a hive. I've been learning about bees. And it just kind of made me realize how powerful the queen bee is in her hive. I want you to kind of like step into this vision of you becoming this queen bee. And your books and the money that flows in your business is like a hive, like you. And I want you to treat your zero file like your hive. It's something that you want to come in, make your home, have it look the way you want it to look so that it makes sense to you. So Queen Bee Books today is all about where numbers become like nourishment. It's something that you're diving into with joy. You're learning to think about it differently. I honestly have always seen numbers as something that tells a story. So I want to impart this new way of looking at it, that numbers are a story. But the only reason why you can't find the story is because you're picking up a standard zero file that is so generic, masculine, and that doesn't represent your business. So we need to take a bit of time to make it yours and you can make better decisions. Once you have numbers that make sense, then you can turn them into something pretty. Like your CEO dashboards, we can start actually stepping back from the detail and start making CEO decisions. Okay, so today is all about you becoming the queen bee of your business, and so that you're not flinching at your numbers. You're the one who's seeing numbers as a portal. It's something joyful, something interesting, something you want to invest time in. So I've developed quite a I want you to see that this is like part of a whole system. So Queen Bee Books is the module we're doing today. So this is how the whole system comes together is there's these different components, different modules, but they're all building your financial IQ, your clarity, your focus, and they're all part of you becoming a CEO who's magnetic and measured. We spoke about the identity ascension blueprint, and that was the different levels. You're moving from this like foggy and frustrated into magnetic and measured, which is the top of the pyramid. So you might be at this level right now, foggy and frustrated if like you don't have a zero file, you haven't been sort of doing much on your accounts. You might be delayed checking your numbers. I know for sure. I've heard this time and time again. I don't know for sure. Cressida has told me this as well, that it's almost like there's a sense of I'm too scared to look at the numbers because I don't want to really know how bad they are. All right. And so your body's telling you, like, don't look at something bad, but how can it improve if you don't actually see what's there? If you don't actually know how much you spent on certain things, you're not going to stop yourself by doing the same thing again. So you probably are feeling, you're delaying the numbers, you're putting things off. It might be years, it might be months that you don't like put in a routine. Your profit feels invisible even when sales are flowing. So it's not about more sales. It's about keeping more. And I heard this yesterday on another call with another business. They aiming for like millions in their business. But right now, where did the money go? Because it came in, but it went out just as fast. So where is the profit? And the only way you're going to see the profit is by looking at your zero file, like getting into it and starting to really understand like what makes up profit. Where is your money leaking, as in you're spending too much on things, depleting profit, and then decision making. If you're making decisions based on vibes and feel good and instant gratification, and then after you've made the purchase, you start feeling the guilt. They're like, oh, should I have done that? Should I have checked my budget? Is this something I should be investing in right now? All of these things will come up. And you're only going to stand by big investments when you know that, hey, I know this is a good investment because I'm going to get return on money. I know my cash flow is steady. I have a buffer in place. Then those things don't come up. So we want to move over from this like vibes and urgency decision making into this magnetic and measured, where the view is you're opening your file, your dashboard. So you don't actually have to look at the transactions anymore. You're looking at a dashboard, a summary. The dashboard reflects your growth, what you're focusing on. The numbers are, you can start celebrating because you're like, I'm hitting my benchmark again. I've reached my goals again. I'm better in this area, but maybe I need to work on this area. And you're also tracking what matters. So you really can't scale or improve anything unless you're looking at how to improve and investing time in it. And sometimes you just really need to focus on one thing and do that well. And I know I've been doing this with my podcast. I've been really focused on scaling it, getting it ready for monetization, focusing on improving my listener rate, really focusing on consistency. And then over time, I can see the data, the metrics, the numbers that are showing me what I'm doing is working. And then I'm feeling good, right? Because I've like slowly been improving it. Now I'm feeling amazing. Now I can really step forward with more confidence. But if I didn't see any of the data, I didn't see any of the numbers, I'm just posting episodes, not looking at the episode data, not looking at the statistics or the analytics or comparing, then I could just get lost in the noise. I know Shani made a significant investment this week. She signed up to the CFO package with me and she was like, yes, I did it, but I didn't check my budget, right? And I'm like, no, that's okay. You know, there's certain decisions that are improving your business. It's not like you're going out and buying a car or a depreciating asset. You're actually getting help. Feeling foggy. Yes. Amazing. Great. Okay. So let's move into what I'm going to be taking you through today. So we're going to turn to look at your numbers. We're going to open Xero. We're going to start having a look at the profit and loss, what needs to change. I'm going to give you some core focus areas so that you can start focusing your power and lasering in on your goal and then how it relates to numbers.
It's really hard to concentrate. Maybe they can go upstairs.
All right, we're going to go through the 5 metrics to focus on to help you with your decision making. Because when you have one decision, one focus on your business, then you have metrics that back you up. We're going to go through a ritual to help you look at your money and do your money date. Side the work I do, I have a monthly money date. So you will be doing your money date with me because it's just part of the cycle I've set up for you. And that's going to help you be accountable. So next Wednesday, we have the money date. So whatever we're doing today is what then you can bring to your money date next week. So it is a step-by-step process. Today, we're sort of diving into the numbers in the Xero and starting to unpack that. And then next week, we're going to sort of step back and do our money date. I also want to show you how to look at your profit leaks and find where the money and cash is leaking, which areas to look at, maybe how to split out your expenses so you can identify them. And then I'm also going to show you some dashboard styles. We won't go into this in much detail, but I just want to kind of give you an essence of different dashboards I've developed, and you can kind of pick which one fits with you. It'll be interesting to me to know which ones you all choose because then I can focus on developing those further for you. All right, so we're going to start the process now. So the process is we're going to open our Xero file. I'm going to do it on the screen and you can follow along. We're going to look at the profit and loss statement. That's showing us revenue less expenses, basically the flow of money through the business. There are 3 main reports, but we're just going to focus on the profit and loss. That's the most important one because it tracks your profit. Then we're going to look at patterns and truths around the profit and loss. So I'm just going to use the standard file and talk through what questions I'd be asking. We're going to pull out some profit leaks. Then we're going to look at banking, what accounts you should have set up so it's easy for you to structure your banking. And then we're going to look at a monthly report or a dashboard style that then you can say, okay, each month I'm looking at these key numbers and that's all I need to track. And once you have that, like I said, I've been doing it with a podcast as well. It's going to give you a lot of information to compare, measure, decide when you can double down on things. And this is the process. So before I do this, let's just have a quick chat. So is there anything that you've tried in the past as far as bookkeeping that is, hey Chris, how are you going? How's it going? We're all balancing school holidays. Yeah, I get it. Okay, so we're just about to step into Xero, Chris. I was just talking through all the blocks around, looking at your numbers and things like that. So, what have you done with your Xero file? Is there something that's bugging you, something that's stopping you from stepping into Xero that I can help you with? Yeah, you can speak. Go for Chris.
So I've just moved from QuickBooks to, and I'd kind of worked out how to reconcile stuff in QuickBooks, but I don't know how to do it in Xero. So
Okay.
I actually just look at it. I actually I was looking at it this morning, and I was like, I'm not quite sure what to do here.
Okay. Good.
So
Okay. That's a good one. And then the profit and loss today, we're going to go through and we're going to start customizing that profit and loss so that it makes sense. Yeah, I'm just going to use the demo file for now, but we'll see how we go. And then we're going to move into how to focus on your bookkeeping and what goals relate to what numbers you need to see. So based on like your focus for this year, if it's growth, if it's lead flow, if it's branding or profit, you might want to structure your accounts differently because you want to get the information out that you need. If you're focusing on growth and there's a lot of expenses in growth, you might want to split out those growth expenses and have them maybe single lines for different things because I always believe more detail is better in the structure of the file. I mean, I've seen businesses who have hundreds of accounts, right, in their chart of accounts, and then they let the system summarize it, but they can always expand it versus one account for like coaching, and then maybe you've got like 5 different types of coaches. You've got a spiritual coach, you've got events, you've got all these different things going on. To identify exactly where you've spent money in different areas, you don't want to have to go into transactions and have to manually do anything. So it's easier if you set up 5 accounts that summarize coaching versus one. And this is kind of where I'm getting at. And you'll find in the Xero file too, sales is normally one line, which is ridiculous, right? So we're going to go into that now. All right, so let me share the screen and let's kind of just talk through it. If there's anything that comes up and you're like, show me this, I'm happy to do that because this is why it's a live session. I can certainly record extra training on reconciling and things like that. But if I don't know that you don't know, I wouldn't understand. I'm just kind of assuming everyone knows how to reconcile, right? I mean, this is a demo company and look, it looks pretty overwhelming and pretty like lots to look at. But the main thing I look at is your business account here. You might have quite a few different accounts and this one's got tasks. I wouldn't even bother with that. Xero is starting to try and do reports and things like that, but I would prefer to see a proper like cash flow spreadsheet versus just a standard money in, money out. That doesn't make sense to me. I want to see it broken down. So I don't really use any of those things. This chart of accounts watch list, you can actually on your chart of accounts flag some accounts that you want as a summary. So this is like a custom thing that you can tick on things you want to see. So maybe there are, based on your goals, those 5 accounts you want to like keep an eye on. Like I said, I don't really focus on any of this stuff. If you're invoicing, great, but maybe you've got a different system, maybe people pay you. If you're recording bills before you pay it, this is how you can track your payables. If you've got 30-day terms or something. But most of us are on sort of a cash basis. You need something, you buy it. You don't put a bill and then take it and walk away unless it's like Afterpay or something. Okay, so let's just go into say, I mean, this is saying it's all reconciled, that account there, but this one's got 28 items. So if I were to come in here, when you first set up your account, you can link it to your bank accounts and then it will pull in the transactions. So if we go to transactions here, this is like imported. Somewhere in here, when you set it up, you actually link it to your banking system. Anyway, once that's done, it just imports everything. And then you can come in here and you can kind of see what's unreconciled. And if you need to find something by a specific date or fix anything, this is basically your bank statement coming through Xero. So then to reconcile, it's like 28 things that haven't been reconciled, which when it's not reconciled, it's not showing up on the profit and loss. Okay. So I would recommend you try and reconcile everything before you look at the profit and loss, because it's not just going to magically find its way to the right account. This is what reconciliation is you telling it where to go. So revenue is always on the right. And if you've got an invoice on there with the exact same amount, sometimes it can match it. Otherwise, you can do a find and match and try and find the right one. You might have multiple invoices and it's not that one, it's a part payment of something else. So that's how you can reconcile your revenue. And then with expenses, what's great is once you start putting things through, it starts doing this. It already knows you had a bank fee last month and it's kind of like saying, is this a bank fee? And you're like, yes, okay, that's a bank fee. If you've got maybe say this one is, I mean, that's a receipt, but say, is this bakery? So if you're doing lunch stuff all the time, I would just have a lunch account. I don't actually worry about creating suppliers for every transaction. So you might want to do like an entertainment. I don't like using entertainment because that's a ATO flag. They're like, no GST on entertainment. Oh, is there like wine and
client care? Is there something
yeah, so I would
for
create a
client care?
separate account called like meeting expenses. And so that's my meeting expense. When I go out to lunch or I have a coffee date, that's my meeting expense and I claim the GST on it. So, or you just put it to general or something like that if it's only small. You can just start typing things in and find it on your chart of accounts and then click OK. All right. So Cress, is that kind of sort of helping? It's not so tricky.
Yeah, and sorry, I just asked in the chat. So can you set, I know you said that one might recognize it if you have like the same thing going through.
Yep.
But can you set up a rule? Because I've got all the backlog to do. Can you set up a rule in the beginning? Like all the Australia Post payments are like, you know, shipping fees. Can I do that? Or I have to reconcile some first and then it'll kind of learn?
I think it automatically does a rule. There used to be rules.
Okay.
Or that's QuickBooks, right? Where you set up a rule and you tell it where to go. It just knows now.
Okay.
Like literally once you do it once, it's got it.
I'm still in like kindergarten with this stuff.
No, that's all good. It just kind of realizes that you had that last time and it's just in the background setting up these rules. Yeah.
So is Xero like, obviously it's reconciliation. So I have a spreadsheet that I normally track.
Yeah.
Income, so money coming in, and obviously this is expenses. So I've started from my July of financial year. So would you recommend that I start from last financial year or this financial year now and input everything in so that I've got everything in this financial year?
Yeah, for
half a year.
tax reason.
Yeah.
Only, really. Look, right now the priority is to get in at least 3 months behind, 3 months ago, so that you've got 3 months to look at to forecast.
Sure.
But yeah, for tax time, you would want to sort of have a full tax year. So it's easy for you at the end of the year to just run your report on your profit and do some adjustments.
So do you enter all the income that's coming in and into Xero as well?
You can import your bank statement.
Yes.
Yeah. So I'll show you. I've done this.
So money coming in, and that will show like
Yeah.
profit and loss as well.
When you reconcile it, you can then show your profit and loss.
You can. Okay.
Yeah.
Okay.
So when you say you need to go back a few years, which most people do if they want to sort of clean up things and stuff like that. I've been there, don't worry, it's all good. So say we've just set up this business bank account and we're like, well, we've only got the current from the last month because we just linked the bank account, but we actually want to import the statement. So we go import statement. Now on your banking, you've downloaded your CSV file for the period that you want. So it's just like a CSV file. And so then what you want to do is select your CSV file. Then I have some pre-prepared, I guess, but yeah, we're not going to import it. We're just going to do that. The thing is with your CSV file, Xero is a bit stupid sometimes. It doesn't do things properly. So there's lots of different bank accounts and stuff. So you actually need to come in here and what things are. So you definitely want the transaction date, the amount. It's pretty smart at doing that. But if you don't choose the transaction details, all you get is a date and an amount. And there's no way you can reconcile it because there's no details. So this is the part that you have to kind of have your head a little bit focused on. Don't do this with noisy kids in the background. Description. And then you can see below what you are importing, right? So if you don't have that description, there's nothing. Okay, so that's literally the only thing you're going to do here is just make sure there's a description so that when you go to reconcile it, you know what it is, what the transaction is. And that's how you can do the whole year. Just import the bank statements.
Yeah.
It might be easier for you to reconcile, but say if you already had a spreadsheet with all the accounts reconciled and you just like, I've already done all the reconciliation work. I just wanted to import. You could even have in your CSV file, put in like account number, make sure the account numbers match the Xero accounts. And you could also, if you click in here, account code. So if you told it that's an account code, it would reconcile everything for you.
Really?
Yeah, because it knows that that transaction is for that account code. So basically reconciling at the same time.
So you're trying to like, create this code, which then, I think I was playing around with it the other.
Yeah.
Yes. And it makes it easy. Every time you do it, it makes it easier because you're just going, code.
So how you know what the account code is? So let's go to accounting and the chart of accounts. So this is basically the backbone of your Xero file. So it's got, it starts off with some bank accounts, then this one moves into income, then expenses, direct costs, and then it goes back to assets for some reason. But this is the full chart of accounts, okay? So if you were to add new accounts, I would do it in this screen. I'd be like, okay, one sales account's not going to support my business, so I'm going to add an account. It's a revenue account. The code, I just kind of like follow the next number, maybe add a few so there's a gap. So if I want to like move something, I can just easily do that. So I think revenue is 200. So if you see it doesn't have 210, so I might do 210 and I'm in like sales coaching package or something. If you registered for GST, then you check that it's got GST on it. Usually the GST you set up once in your file and it's like presets. If you're not registered for GST, this needs to be done properly because there's no point saying there's GST on everything when you're not registered because it's just going to mess up your profit and loss. So that's another step too. Happy for you to like reach out to me privately if you need some support with that. Okay. So this business registered for GST. So we're just going to add that in there. And then we've got the coaching package in there. The other thing I would be thinking about here is this is where Xero doesn't do it very well is the cost of sales. I know Cressida and I have done a lot of work in her file to improve this side of things, but you've got to think cost of sales is what does it cost me to deliver the service? And Shani and I have worked on this too quite heavily because Xero's just, I guess, I just think everyone's a service-based business and I think everyone just wants to like keep it basic. I think direct costs and sales are the most important thing on your profit and loss. So if we type in direct costs, usually what's missing is like wages for, say like with Cressida, she's got a lot of staff who are doing the fulfillment, the shipping, the packaging of her products. That's part of the cost of delivery, right? Also Cressida's time in putting together her skincare and sourcing it and doing all of those things, that's a direct cost. So when we start adding that in there, then we might see that if you have wages down here, that's the wrong place. So wages and salaries is a big cost for a business. If all of your wages and salaries is actually direct costs, then I would move this expense to direct costs, right? Don't worry about that. So that's where most of the work happens. You got to think, let's just fix the way the backbone is first before we start looking at a profit and loss. We want to sort of first make sure it's all customized. And then when you start reconciling, you can start putting things to the right place. Yep. So what are the other things? Direct costs for your types of businesses would be subscriptions. So if we do direct costs, say 350. So when I think of most of my subscriptions would be software and delivery besides Xero. But for my business, Xero is probably a direct cost because I'm teaching you about how to use it as well. So software and subscriptions would be up there too. Obviously raw materials, anything like that, shipping costs, all of those different things. How I like to do it is I like to remove as much general expenses out of general expenses. And I'm trying to sort of go, well, is travel direct to the sale? Travel goes up. Do I have to travel? Do lunches? Do I actually have meetings with clients and have lunch at the same time? Is it included as part of their package? Lunches goes up to the top. So you want to keep as much as possible in direct costs because that's going to make sure your pricing is right. And they'll stop you undercharging because you'll finally see how much it's really costing you to deliver a service. Everything like rent and all of those things are fine to be down there. Okay, so now we're going to look at the profit and loss. So cash means your most of your business will be cash. Most small businesses do cash. Accrual means it's going to look at like what sales you've put in that haven't been received. We don't want to look at that. Zero balance activity will turn on anything that hasn't been reconciled to. So all your accounts will show up, which is good. You can turn on account codes because sometimes that helps you to reconcile things. And that's about it. So now it's starting to look better. So we can see our cost of sales here with the new accounts we've put in, your income with the coaching. We can start looking here and be like, this is a very bland profit and loss. So what I do now is I will edit the layout. And in this screen, you're like a designer. This screen is where you can be like, oh, okay, so different ways of looking at your business. You might want to focus on different product lines. So maybe your cost of sales, you might actually want to do it by division or by offer or by type of, avatar or type of client. You can go, as I said, as detailed as you want. You can have this as a set and do 5 sets, one for each product bundle. It's really up to you. So say if you wanted to just be like, I don't want to see all these expenses. They don't mean much to me. Admin and finance is all I want to look at. So you can select some of these accounts here and just be moving them to admin and finance. So that way it's just going to summarize everything under the one banner. This is how you can start making your accounts a bit more useful. General, freight and courier. You might want another grouping. So say if you wanted to, okay, so in here, if you click on the account, so say maybe you want something like license and legal. So think of more like divisional type costs. And then you can start also like moving some of these. Like you've got legal expenses, you've got like your maybe awards or sort of like IP stuff. Yeah, you can see what I mean. So then once you've done that, basically every category can be collapsed on your profit and loss. So now you have the control when you're running your profit and loss. You be like, focus on the main things that you want to focus on. So I think the main thing up here is what I'd want to do is with your cost of sales. Yeah. So the main thing is just getting the right accounts up here in cost of sales. If you need more support, you're welcome to like share your chart of accounts with me, download them into an Excel spreadsheet. We can sit down. I've done this with Crest in the beginning. We just sat down on the spreadsheet and added new accounts and got it right in a spreadsheet. And then we came to Xero and created those accounts. Okay. So when you update the layout, then it starts looking like this. And the thing is, you only need to do this once. And then every month it will have it nicely for you here. There is one. Oh, okay. If you just go like this, then it's just going to summarize one number for that line, basically. So I'm going to update that. The idea is to remove the noise. I want you to just like remove as much noise as possible so that it's just an easier numbers review. So now we've got admin and finance, license and legals as 2 lines instead of 20. And if you clean up your operating expenses just to those key things you need to see, because operating expenses don't change very much. Once you've got something locked in, it stays the same month after month. It's only those, and this is where the profit leaks will come in. When we do profit leak reviews, that's when you might go into admin and finance this month and check if there's anything that's out of whack. And then next month you go, let me just check license and legals and see if everything looks kind of sweet there. Do I need to delete anything? Do I need to cancel a contract or anything? So share with me if there's anything.
Where did you create this profit and loss? Sorry, I missed that one.
Yep. So when you go to the profit and loss, you can go to the bottom here, edit layout. And then edit layout allows you to start doing this, like when you click on a number, you can do a group selection. And that's how you can sort of, maybe like this one, you want all your like equipment and like technology to be in one as well. Yeah.
Would you put your own personal expenses in here, or you want to leave it just for business?
What do you mean as personal?
I don't know, just yeah, you say you have your
Like a telephone account or something, or
yeah, I don't know, just say you've got groceries that you've,
yeah,
purchased and
that's
you
gone
put
through
that,
that.
yeah, that's gone through that account.
Yeah.
Do you,
So this is a good one. What I would do is set up an account. Just gonna update that. I wouldn't put it to the profit and loss because that's not technically a business expense, unless you're like saying I've got to like buy milk and bread at home and away from home. That's fine. I would put it to a loan account. So those sort of things, if we go to reporting and we go down to the balance sheet, which is the like basically what money's come in, what money's gone out, and what's the net equity. So it's like the worth of the business. So inside the balance sheet is where we tick on zero. I would have a like down, usually if you've got a company, it's kind of set up that there's like share capital and equity. And so your director's loans and things will be down there. So that's what I would set up here. I would do in here, I would do, if let's just go back to the chart of accounts. Let me show you. Again, this is something that is not in Xero that definitely needs to be customized. So it's a good question. So if I go to equity up here, yeah. So if you've got just you, then it's just you, contributions to the business. If you've had to like give personal cash investment or drawings, which is when you're taking out. So imagine, and this is why it's so important to have the right bank accounts because you have separate bank accounts and you're managing your cash. You shouldn't have private expenses in there because you should be like, I'm only using my private card for my private expenses. The more you can do that, the easier it is. If for some reason you've got more money in one account and you didn't have the other card with you, then it's fine. But it just gets like kind of messy in the account. So what I would do is add in here to say it's an equity account and it's say 950. I would do basically it's a loan, director's loan, like drawings, personal, expenses. Now that's going to be BAS excluded. It's not going to record GST or anything on it. And it's going to sit down there. Then you would also create another one. I like to see everything full. So if you're putting money into the business, if you're like, Jesus, I don't have enough cash in the business to pay my expenses, I have to like transfer $5,000 to fund the business, then it's technically you contributing to the business. So then if there's money coming in that's not sales revenue, it's your contribution, then that also gets recorded here. So say it's like 930, that would be director contribution, money in if it's easier for you to like work out, capital from owner to fund business. Most businesses, when they start out, the owner like contributes 5,000 or 10,000 to start it operating. As maybe you've had a bad month the last few months and you've had to like put personal money in to keep subscriptions paid and things like that. Even if it's out of your personal account, you can still import anything that's come from a personal account. I actually honestly have my personal account linked to my Xero file because I do this sometimes. And I'm like, damn it, I paid for that, but I want to claim it in my business. So I just out of my personal account only reconcile business expenses. And it's like, that's how I capture it. Okay. Does that help, Ria and Cressida? Does that kind of help you with that CEO pay? You could also, when you're paying yourself, it's either drawings, you're just taking it out of the business, or if you've decided to pay yourself a set amount as like a wage or salary, then they can go through the profit and loss. Otherwise, it's technically like a drawings. But we're not doing this for tax reasons. So I would also want to know how much I'm paying myself. And for me, it's a business expense. So, and then I'll just move it at tax time for tax reasons. It's the password. Okay. Here's another thing. I would, when I pay myself, put it on the profit and loss. I don't really care what type of business I'm running. It's to be profitable. I need to know how much I'm taking. That's my wage or a payment to survive. And, it's part of running the business. So it's for me, it has to be on a profit and loss. Otherwise, it doesn't make sense to me that you're missing a very significant expense. I would also would recommend that over time you start splitting out what amount of your time is like delivery of coaching, delivery of service, and what time is administration, other time that's like not related. And I would even split out my payments into like 20, 80% and be putting it in the right place. So if you were to do that, you would go here. I'd probably say direct cost, say 220. You could do something like just like CEO pay because then you know it's yours. Direct delivery time. Yeah. And then obviously, yeah, I wouldn't do GST on it because like technically it's like a director's withdrawal. So I do BAS excluded on that. Okay. So now that's going to sit up here. So every time I like pay myself, say if you're taking 1,000 a week for yourself, then you should be taking money. So you put it in your personal account. So your personal account can then fund your personal life. Like money needs to move to you. So that's direct delivery time. And then I'd also put one down here just so you're not messing up your profit and loss. I'll do an expense one here. Say, I don't know, 630, whatever. CEO pay. And then I do administration and, like scaling or something. So it's future cost, future development. And I would also not do GST on that unless you're like invoicing from your ABN to here. And it's too complicated to explain. But just say that's BAS excluded. All right. Then when you pay yourself, I would just decide on a percentage and I put like 80% up here and then maybe 20% down here or 80% down here and 20% up there, depending on where you're spending your time. And the only way you'd know that is if you sort of track your time over a period like of 2 weeks and be like, okay, I know where, like if I was working for an employer, this is my productive time, this is my non-productive time, and then just create a percentage. Does that help? Yeah.
Yeah.
Sort of.
Yeah, no, it helps. It's just more around going back, feeling the overwhelm. Oh my God.
Yep.
There is so much I have to import.
Yeah.
Reconcile from the last
good. You're gonna feel good when it's all cleaned up. It's just something that, and I'm saying this because it's gonna mess with your vibration. How can you let more money in when your nervous system is like, hold on a second, I'm not ready because I haven't done my books. I don't know where things are going. You are energetically blocking more money coming in. So sometimes we'll just have to like, you know what? I'm blocking out Sunday and I'm just going to roll my sleeves up and get into this file, customize it and just get it looking the way I want to. Absolutely, we can do more like nitty-gritty work on this together. So once you have your chart of accounts, you can share it with me. We can sort of like workshop it a bit more. But also know that, nothing's going to be wrong here. Like everything is fixable. Xero is meant to be something that anyone can pick up and do. And yeah, if you get stuck, there's plenty of sort of like videos on how to reconcile or how to do sort of basic Xero things. I think for me, it is helping you get over that block around doing it. That's the thing that's blocking you right now is like, I don't even want to invest time in it right now. But if you don't, how are you going to manage when you start receiving 10,000, 20, 50,000? How are you going to manage a business that's scaling without having foundations? So if you think about it, I'm building a house, but I haven't got the foundations yet. You've got to get those foundations in because you can't build on top of something that's unsteady. All right, amazing. So let's go back to, I think that's mainly what I wanted to cover with Xero today. We've got another session in a few weeks where we'll go back into this and we'll like dive a bit deeper. But the main outcome for today is for you to open an account, see if you can link your bank accounts, import those transactions, just get in there and start reconciling. Before you reconcile, get that chart of accounts as detailed as you can. Don't stress if it's not, because you can always come back and move things around, rename things, move things around. But yeah, if you just draw a line in the sand and say, I'm going to get my last month reconciled, then I have a month to look at and run a profit and loss. And then I will do another month next month, go backwards a month and keep a month. And you can just slowly go back and back and back. And yeah, reconciling is actually quite fun once you get into it.
I think it's fun.
I get it on a roll. Just put some music on, just sit there and it's like, let's get this done. Okay. So Chris, how are you feeling with all of this?
Like, no, I love it. No, I'm kidding. That's fine. I actually I was looking at it and I was just thinking, I actually want to what I really want to do is go through and get rid of all those subscriptions. And I'm like, I went into zero and I'm like, damn, I actually have to do something in here before I can do that. So it's it's a bit of motivation to do it.
Yeah. Yeah. But the good thing is, like, you can always go to that imported banking area and just see what's hit your account as well. So if you want to kind of bypass the whole reconciling to profit and loss, you can just do a quick, run through and see, okay, open your bank account, go into here and see, okay, what's hitting my account here that I don't want to be spending money on, and just kind of do a squiz through here.
It'd be good if there weren't so many transactions going through my accounts, wouldn't it?
Yeah, exactly. So with Cressida's business, she has another system that does the invoicing in the product area. So what we are doing is linking that to Xero, so it's feeding the right information. So it makes, instead of just saying sale, deposit of money, we can actually have what products are sold, what the expense is, what's the shipment fee, and all of that coming in. The same thing with Shani's business is it was connected to ServiceMate, which is like the invoicing system and everything like that. But it wasn't really, it was lumping everything into one amount for sales as well. But when I went into the system with her, which is what I do, if you have other systems, we do like a walkthrough. We look at how to customize that system so it feeds more detailed information in. Now that system is set up that she can see exactly what types of sales, it's got graphs, it's got all the detail in that system, and then Xero's just pulling what we needed to pull through, and it's pushing it to the right accounts now. So it's speaking to each other.
I actually got excited. There's something called Shopify Flow, which is free, which sends stuff through.
Great.
So I'm like, cool, free. I got excited.
I want another subscription, and we know. Yeah, look, I think for you, it's like you can go into Shopify and get some reports out of there. And then just as much as we can get into Xero, that's a bit more detailed. That would be better for reconciling. So we're not wasting too much time trying to do both at the same time. Yes. Great.
In regards to the CEO spreadsheet or the spreadsheet that we went through last year.
Yep.
What would you recommend? Would you go Xero first and then we do the
that's what we're doing. Yeah.
Yes. Okay.
Yeah.
And we'll go through that.
Yep.
Again. Yeah.
Yep. So over the next few weeks, so next week's the money date. We'll start going through a bit more of the dashboards with the money date, because the money date is for you looking at metrics and your numbers. And so it's assuming you have something reconciled. Yeah. So it would be great if you had at least a month reconciled to bring to your money date, because we want to do a money date every month. So that would be good. That's kind of your homework. If you can bring 1 month of a profit and loss, or 1 month of a summarized spreadsheet that's got your revenue and expenses broken out, then that can become part of the money date. Okay. And then we're just going to be building this over time. Each time you do this, it's going to get clearer and clearer. You've cleaned out a few more cobwebs, and you're not alone. There are so many people out there who are exactly where you are. And the whole point here is there's absolutely no shame, because no one's taught anyone how to do this. Like, you can start a business, register an ABN, get a company, and there's no requirement to know how to manage it, what numbers mean, and all of those sort of things. So yes, Ria.
So just a quick one. Obviously, I feel like I'm kind of starting from zero. So stuff like, the expense of a subscription for Xero is a business expense. My personal, I haven't set up a business account. So when I set up a business account, my personal is depositing into that account to pay for said subscription. So at the end of the month, I'd obviously be at a loss. Is that correct?
Yeah, exactly. So if you have expenses but you don't have income to match it, you'll just naturally be a loss, like growing loss, until you make a sale, and then you're like, oh my God, they paid in full, and now I'm like back to profit. Or
so how does that then reflect if, for example, so probably tangibly, I'm sort of thinking of my partner's, he's just started up a dojo. So at the moment he's paying rent. He hasn't got any students yet. The rent is, for example, $80 a week. So that's coming out. How would that look? Yeah. So he's personally putting into his business account, and then that expense comes out of the business account. Is that how it would be?
So that's exactly what I was saying with the.
Yeah, it was more the tangible, because obviously what we're doing, like I said, is a service base.
Yeah.
So trying to kind of like reconcile it in my head.
Yeah.
How?
Every time you contribute money to pay off a business expense, it's like an owner's contribution. I mean, it's
Okay.
cleaner if you had two separate accounts. You have your business account and your personal account. And then
Yes.
you're like, okay, I know I've got $500 of business expenses for a whole month. I'm going to transfer 500 and then everything is coming out of here. And the
Yeah, perfect.
500 that goes across is owner's contribution. It's like I'm contributing money to my,
Yeah.
like I'm like going into the
Yeah.
bank and depositing money in my business account.
Yep.
And then the business account's the one that's got the business card that's like paying for everything. And so that's clean. That's like the golden
Yeah.
line of
Yeah.
what I'm trying to
Yeah.
do. That's the better way of doing it. The more accounts you have, it seems like it's like, why do I need so many accounts? It's actually better for you to have more accounts
Okay.
because you can then have what I would recommend, which is what I've been doing, which makes so much more sense now, is think about the money flow. I have one account where all income goes into, one account where all expenses come out of. Then I have an investment account where like the profits or a share of future, savings or whatever goes into an investment account. And then I've got my personal account and then also a GST and taxes account, right? So then technically, say if you had a 10 grand sale, you would sit down and go, okay, $10,000. 1,000 needs to go to GST and tax. 30% goes to me. The rest goes into 50% goes into the business, and then the balance, however, you want to just leave it in the account, banks up.
Yeah.
That's what I would be thinking. If you can sit down and just imagine receiving $10,000 and what you would do with that $10,000, and then work out, okay, what accounts do I need, and then go and create those bank accounts.
Yeah.
Because every monthly money date, the end result of that is you moving money around. So it's like you're looking at your profit, you're looking at your bank balance, you're going, okay, with my bank balance remaining, what needs to go out of my income account into my expense account for next month? How much am I paying myself? So you're kind of treating it like a review, a payday, and also being responsible for having enough money to pay your GST and have those obligations. Yeah.
Of course.
The worst thing is getting stuck by thinking you've made 10,000, and then next month GST is knocking on your door and you're like, I don't have the money for it. So cash flow forecast will help catch you on that point and stop you from spending because you'll see the GST sort of banking up over here and you'll be like, I need to save that. So a better way of doing that is to physically move money. So you've had this like hard close on it.
How much percentage would you put away for the tax/GST? Is that what the account would be?
Yeah, so with GST, I mean, it's 10%, but it's also, 10% of income less what expenses you have.
Yeah.
So you can run a GST report and kind of like get a gauge of like, well, an easy way to do it is just, if you ignore wages, you just take your net profit by 10%, right? So it's just like the net amount.
Would it be 30% because we have to pay 30% tax?
Well, with taxes of profit, this is the way it all comes back to profit.
Yeah.
Right? So, yeah, I mean, this is where you would run your profit and loss. I would say, to be like
Conservative,
30%, but you've probably got more expenses like depreciation and other stuff that you can claim on tax time, which you haven't got in your accounts yet and things like that. But yeah, 30% you can just chuck in there. So you've got like, more than enough. Yeah.
Yeah. And I think for me, like when I was PTing, like as a general, and, Shell knows this, like we tell our PTs to set up as a sole trader. And, like we've kind of got some of these basic guidelines that we tell them for setting up their own business. And I think for me, it was always like, okay, I've set up a business banking account. There's nothing in there, but it's like costing me to have this business account. And so when you're talking about, that's the stuff that I don't look at because I'm like, I've got an account that's actually just costing me just for its presence. So it's good that I can now maybe use it.
Well, my account doesn't cost me anything. I don't think I get charged for an account.
I think now because it's not doing anything, like I think it was more about like the amount of money that was coming in, like you've got certain.
Yeah.
I've got my income account, which is an online account, which is not a business account, right?
Yeah.
So that's why I changed it because I didn't want to pay $5 a month on the business account.
Yeah.
do an online account or a savers account for your income, for your business income.
Yeah.
Yeah.
I've got, because I'd set it all up with Westpac, so I've got my personal and my business in Westpac.
Yep.
So I might,
If you don't have a company, look, you don't need a business account, okay? So it's just a bank account. It's just a place to put the money in. You just need separate accounts, like separate buckets.
Yeah.
Yeah. Yeah. Look, I have also another module called the company container, which I'll go through in a few weeks, but that's where you've reached a point in your business where you're like, okay, I have to move from an ABN to a company.
Yeah.
Man, I wouldn't recommend it in the early days because it's an expense.
Okay.
It's another tax return. It's like
Okay, cool.
reporting.
So we're okay at this stage where
Look,
we're
at
at.
this stage, if
Obviously,
you're starting out, that's totally fine. But when you get to a point where you want to sort of like, if you've got a house or you want to protect your assets, and say if a client had an injury and then they want to sue you, you don't want them coming to you personally. So that's when a company, if you're doing everything in a company, there's that line where they can't technically sue you because it's suing the company. Unless it's like obviously something that bypasses a company, if there's like you weren't being safe or something like that. But most of the time, that's why people set up a company, is for protection of personal assets and to separate their personal life from the business, which either allows for expansion or just allows for like a clean business. Yeah. Mainly only if you've got employees or you've got sort of outside parties involved that I would consider doing that. Okay.
And with the Xero subscription, like I'd sort of mentioned, like Ryan's just sort of started his dojo. I think like, is it possible to have two things in Xero? Would you recommend having two separate Xero accounts even?
Are they going to be different businesses?
Yeah, they are.
Businesses. Like it probably makes sense to have two Xero files. Or
like as far as just a subscription, can we have multiple accounts in one subscription? Do you know?
You pay per like company. You could have multiple like company. When you open Xero, you can like flip between the different businesses.
Yeah. Yeah, because obviously like even Shell with Chris, he's sort of, he's potentially got some
I won't
business.
have two separate.
Yeah.
But I do have like, BioElico.
Yeah.
Yeah.
You want to keep your different business entities separate unless it's like, you would have your retreat business and your coaching business all in one because it's just like within the same ABN. Yeah.
No. I get it.
Amazing. Cool. Well, look, I think the key thing here is just like get started.
Absolutely.
I've had quite a lot of people who come to me and they're like, I've got two Xero files. And I'm like, why?
Yeah.
How did that happen? And so we don't want to like create too much noise. We want to try and just keep it simple. If your business is so small that you can just run it out of a spreadsheet like you've been doing, that's totally fine. You can run it out of a spreadsheet.
The one that Rita showed me.
But if you want to, be able to see profit and loss and be able to do a bit more with it, then Xero makes sense because you can then grow and have foundations and feel like you are a business. And, it's just that identity shift. It's a small subscription, but it's worth it.
Yeah, I love it. I love it.
Planning for, scaling and being responsible with your money.
Yeah. Oh, that's awesome.
Amazing.
Thank you.
Okay. Well, love you to share like one thing that I've shared today that you like didn't know, or you're like, oh my God, I'm excited to start on this thing. What are you excited about? And what thing did you not know that we went through?
Just starting and I'm going back to basics and setting the foundations because that's where my head's at the moment. So this year is all about, going back to basics, setting the foundation. Now that I've got a little bit more knowledge around money.
Yep.
The most important thing is just having the foundation first.
Yeah.
And keeping things simple.
Yep.
And also with Xero, just although I've been looking at a spreadsheet for such a long time, it's essentially the same thing. I've just got to put it all in there and just got to do it.
Yeah.
I just got to put it all in there, do it. And not let it overwhelm me. But what you just said is, how can I receive more money if my systems aren't clean?
Exactly.
And have clarity. So I need to be able to move, in order for me to move forward, I need to have clarity and cleanliness and calmness in my systems and in my money.
Yes, exactly. And I've been writing my book, and this is why, like, I really want to bring this home. Is that the very first chapter of my book is why do women fear money? It's like, why is there a block around money? And when I think about it, it's like, well, money is masculine. Accountants and lawyers and all of those professions have made it seem complicated, jargony, technical. Can't do it yourself. You need to have someone to do it for you. And there's this whole like veil of you got to hand it to someone else. And I want to empower you to be like, no, you're a powerful woman. You can run a business, you can run a household, you've got kids, you've created life. Like, of course you can do this. It doesn't have to be complicated. Women should be managing their own money because it's a power thing too. If you allow someone else to manage your money, to take money, to tell you what to do, you lose power. So when you start reclaiming your money power with how you're managing your own money, then you become more powerful in receiving money. And so that's the whole thing. It's like let's just clear this energetic. It might not be your lifetime. Maybe it's past lifetimes. Maybe it's like relationships and society. And when we clear it, then you can open the gateway to receiving more. And that is what the next step is. Okay. So clear it up. Why is there a block? Let's just like break through those. And then we opening up the channel, the portal to allow more money to find us, to be comfortable with us because it's got a place to go. It feels nurtured and loved, and you're looking at it and you're nurturing it like the queen bee of your hive. And that's how it works, right? So when you think of it more in the feminine vibrational side, you can be like, yeah, it doesn't have to be complicated, and everything is figure outable, and you can customize it and do it your own way. Yep.
Love it.
Good.
I was very much a head in the sand. Like, Shell knows this. Shell's very much like, no, I need to know where every cent goes. I'm like, money will come. So I love the fact that it is giving me permission to look at it in a safe way. There you go. That's a really good little mantra for me. Because in the past I was one of those naughty people that didn't lodge my my taxes for a little bit. And, I was like this. Thankfully, I had a good crew behind me that didn't make the pain too painful. But I think that's still a bit of a scar from like I was like, it still just feels like it's going to hurt. Like, I think last week, when you were like, have you done your taxes? And I messaged Ryan and he goes, I don't know, do you need it? Do you need the tax return? I was like, I've never had a tax return, so I just want it cleaned up. No, I really appreciate that. And it's a really good reframe on the business, because it's now feeling, and I feel like that's where it's potentially not flowed previously of, okay, I'm getting all this money. It's feeling like I'm getting all this money, but then what? It's like, it's also feeling like the money's gone nowhere.
Yeah.
I also love the fact that you, in the CEO expenses, like, you've broken it down to like the admin and, even the same as what we do in our house, like the untangible, like the house admin things, like that, like we should be claiming that does cost us, that is an energetic expense, that is an expense on us. So, and that in itself, I guess, will allow me to feel like, yes, I can charge this, because there are the hidden expenses or the unseen things.
I miss that part.
Exactly.
So basically, like what Kerry was saying, like, if you're paying yourself $1,000 for the week, and say, for example, of that $1,000, 800 of that was running a course or workshop, then 200 of that may have been the admin stuff. So there's a portion of your income that is admin, which is the non-tangible things, but you're essentially bundling it up to, hey, Kerry, here's my invoice for $1,000, even though I may have only delivered like a 3-hour seminar to her.
Yeah.
Okay.
So you can actually kind of itemize it when you're billing someone as if it's an actual, this is the workshop, this is the cost of the venue, this is the cost of, the admin.
Exactly.
Exactly. I know what you mean. Yeah. No,
and this is like on the profit and loss, when you split out, like when you're saying how much have you paid yourself, where does it sit on the profit and loss?
Yeah.
So it created that account up there for profit and loss, like direct expenses or like delivery of your service.
Yeah.
The time,
Yeah,
for delivery.
Yeah.
And then the time of like doing a podcast or admin stuff or trying to sort out my files and, they're cleaning the house or whatever it is. It could be that. So look, in a business right now, you don't have investors. You can pay yourself whatever you want. The only thing stopping you is how much money is coming in, really, and how much you want to leave aside for future buffer. But once you have your profit and loss, if you have a big month, if you're like gone from nothing for a few months and then you hit a 20K month, you can take all of that if you want to, but you're not going to be comfortable doing that if you don't know where it's going. And this is why it's important to start tracking your time, because your time is valuable. As an employee, you're tracking your time, you're logging in, you're logging out. As an employee, you are like being productive and non-productive, and you're going to put it on your timesheet. I know I had to do that and keep an 80% productivity ranking. Otherwise, I'll be like on my performance review, that'd be like, why are you spending so much time on admin? But for your own business, it's probably good to sit down at least for a week or two and do like an energy audit or a time audit where you like just got a little spreadsheet and okay, this is the time on Monday, how much time did I spend on clients and how much time did I spend on different parts of my business? Because technically to run your business, you're the most expensive part of it. You're creating it. You're learning, you're growing, and yeah, you're signing up to get coached, and that's an expense, but there's also, you need to be remunerated. So when you start tracking your time and then you give yourself an hourly rate and then you start adding up how much you're worth, then you probably will pay yourself properly and be like, okay, I'm worth $1,000 a week. I'm transferring 1,000. As soon as that revenue hits the bank account, 1,000 goes to me, pay myself, and then I'm working out what's left over, where that's going to invest in GST tax. But you pay yourself first. And over time, it won't just be a flat amount. You'll be like, 30% of my revenue is straight to me. And every time you receive a sale, you're moving that money to you. Or at the end of every week, you're paying yourself 60% or whatever your sales are because you're the one delivering the service. Yeah. But we can get to that point.
I've been doing that.
Good.
It's a small amount, but
Good. Yeah. So every time you have a payday, you got to celebrate and be like, yes, I've earned this. I really like feel good about this. And two, it's going to clean up your accounts because now you have money in your personal account that you can use for your personal expenses and not be like dipping in all the time and making it messy. Yeah. All right. I'm so glad that I've given you permission. This is all like a safe space. And yeah, it is my mission to help more women to feel like powerful with their numbers and to demystify everything and